The core issue with India's health insurance sector is that it's stuck in an outdated paradigm, focused more on selling policies than on genuinely funding healthcare. While the industry boasts rapid growth, increasing premiums, and expanding coverage, beneath this shiny exterior lies a troubling reality. Are these rising premiums truly being invested in patient care? Or are they mainly fueling commissions and administrative expenses? To understand what's really happening, it helps to revisit the fundamental purpose of health insurance. At its heart, health insurance should be a simple but powerful system. Many people pay a small amount into a communal pool so that those who fall seriously ill can access the care they need without shouldering exorbitant costs. Healthy individuals subsidize the sick, with the understanding that one day they might need similar support. This mutual safety net is designed to protect the vulnerable and ensure access to healthcare for everyone. However, this promise appears to be breaking down in India. The primary measure of an insurance system's efficiency is the medical loss ratio, MLR, the proportion of premiums that are actually spent on paying medical claims. The higher the MLR, the more of the collected premiums go directly toward patient care and less towards commissions, management, and administrative overhead. Unfortunately, recent financial disclosures for FY 2025 reveal a disturbing skew. For example, several leading standalone health insurance companies have reported the following data. Star Health collected approximately 14,822 crore in premiums, of which only 70%, roughly 10,419 crore, was spent on claims. About 15% went to commissions, and 17% covered management costs. Care Health Insurance's claims constituted only 58% of premiums, with 20% allocated to commissions and a similar percentage to administrative costs. Niva Bupa and Manipul Cigna showed similar patterns, with claims covering just around 60 to 64% of premiums, and significant portions diverted to commissions and overhead. What do these numbers reveal? Essentially, between 15% and 24% of premiums are funneled into agent commissions, while management expenses swallow up another 17 to 28%. Meanwhile, less than 60% of premiums are directed toward the very purpose of insurance, funding healthcare. The situation worsens when investment income, profits from invested premiums, is included, dropping the effective MLR even further, down to around 54%. Now, how does this compare internationally? In developed countries like the US, regulations require insurers to allocate at least 80 to 85% of premiums directly to patient care. Similarly, countries like Germany, France, and the Netherlands cap administrative and sales costs at around 10%, ensuring the lion's share of contributions actually funds treatment. In stark contrast, India's model seems to be veering toward inefficiency, relentlessly pushing premiums higher, sometimes by 10 to 15% annually, yet eroding public trust. Hospitals face squeezed margins, patients struggle to get approvals, and many end up paying out of pocket for treatments. This brings us to a hard truth. India's health insurance industry is behaving less like a genuine safety net and more like an elaborate sales machinery. Growth metrics are now measured by policy sales, not by how much care is actually financed. It's less about insurance and more about marketing masquerading as protection. If the country truly wants health insurance to serve its purpose and be meaningful, two significant changes are needed. First, regulators should set clear MLR thresholds, mandating that at least 80 to 85% of premiums go directly to patient care. Second, efforts must be made to bring down the costs of acquiring customers to single digits and to cap management expenses, ensuring that funds are directed toward healthcare, not corporate luxuries. Ultimately, India's industry must transition from aggressive policy sales to transparent, patient-centric funding of healthcare. Without improvements in efficiency and stricter regulatory oversight, The promise of health insurance will remain unfulfilled, remembering that it is meant to serve patients, not profit-driven marketing tactics. It's time for India's health insurance sector to mature, move beyond selling policies, and start truly funding care. The question remains, are policymakers and industry leaders ready to make this shift? And what do you think? Can India's insurance system be reformed to truly put health before profits?